I'm not bearish on the crypto market going into this Wednesday's FOMC, and I'll explain exactly why in today's video. Now, before we get started, if you do enjoy this content, be sure to subscribe to the channel and click the bell icon to get notifications so that you don't miss out. So why am I not bearish on crypto? Now, before I get into the specifics, let me be clear and say that not being bearish is a little different than being overly bullish, okay? There is a middle ground there where right now I'm leaning more toward the bullish side than the bearish one. And I'll explain that in today's video, but I do want to clarify that I am not overly bullish on the market right now, just because we have a very sideways market, we have a longer term downtrend, and again, we do have FOMC coming up on Wednesday. And furthermore, I also want to say that just because I'm not bearish today doesn't mean I won't be bearish at the end of the week. Okay, it all depends on what the market does, and I get a lot of flack on Twitter for flipping my bias, as do a lot of other traders, but I'm telling you right now, if you want to be a successful trader in the crypto market or the stock market or any other market, you have to be willing to flip your bias if the conditions warrant it, okay? If the market breaks a key level you're watching, okay, and invalidates your theory, you have to be able to flip your bias. Because if you can't flip from bullish to bearish or vice versa within a matter of really hours, then you are probably not going to make it in this industry. You have to be able to flip that bias in order to survive in this market. It's not about getting bullish or bearish and staying that way, okay, and calling for, $50,000 Bitcoin no matter what, or $10,000 Bitcoin no matter what. You have to be able to flip-flop depending on what the market is showing you. Okay, so with that said, let's take a look at the S&P 500 first. And this is kind of the primary reason why I am not bearish going into FOMC. I'm the kind of trader where until a market proves otherwise, I'm going to stick with the plan. And as far as the S&P 500, I've been saying for weeks now that as long as this market holds above 3,900, okay, so back here I was saying that if we got a breakout above this area here, then this would flip to support, and I'm not going to get bearish on the markets until we see it close below this level. Okay, so unless the S&P 500 closes back below 3,900, I am not going to get bearish. It doesn't make sense to do so. Now, that doesn't mean that it won't do it, but as of right now, you can see that the market is clearly holding above that level and really just going sideways here. So this is kind of what I expect between now and FOMC. I don't expect a ton of movement from these markets just because typically leading up to a big event like FOMC, you do get a market that just goes sideways. All right, now we could get a retest of 3,900, but again, this is going to be support down here for the market. And as long as this is support, the market's holding above it, then I do think there is a pretty good chance we see a move up here into this area just below 4,200 for the S&P 500. All right, so this has been a big area really going back to February, and it's also the 50% retracement of the current year-to-date range. So you can see the all-time high down here to the recent low. This high up here, keep in mind, started right at the beginning of 2022. So this right here is the year-to-date range so far. You can see where the 50% comes in right around 4,200. So in my opinion, this is the most likely area that the S&P 500 is going to want to test if we do see further upside. Now, obviously the big variable there is if we see further upside, especially with this week's FOMC coming up. But again, 3,900, this down here is going to be the must-hold level for the S&P 500. And the fact that it's trading above it right now is really the first reason why I'm not bearish on the crypto market, because we know that for the entire year, Bitcoin has pretty much been following the S&P 500, the NASDAQ. It doesn't matter which index you're looking at because they all move, relatively closely together. But Bitcoin has been following the S&P 500 pretty much all year. So this is going to be the first reason why I'm not bearish on the crypto market. If we look at the total crypto market cap, I talked about this last week. You can see where the market is holding well above the area between $940 and $960 billion. That's going to be a must hold for this market. All right, so we got the breakout here on this candle. Since that time, it has really just gone sideways. Okay, so this is not a bearish pattern right now, in my opinion. Sure, we could get a close back below this area after FOMC. And this is why I said that just because I'm not bearish now doesn't mean that I won't be later this week. But as of right now on Monday, I have no reason to be bearish going into FOMC. So this is going to be the must hold for total. And if we look at Bitcoin, it's really same thing. This is going to be a must hold area for BTC. Now, of course, we could get a close below it and a close back below to cause a fake out down here. But really the area right around 21,600, this is what I talked about over the weekend. This is going to be the must hold level for Bitcoin. As long as it's above it on a daily closing basis, in my opinion, there is really no reason to be bearish. Okay. So here's kind of what I'm looking for going into Wednesday's FOMC. And I talked about this a little bit over the weekend on Saturday, but FOMC events have a tendency to trigger a fake out within the first few minutes, maybe up to like an hour or so. But typically the first few minutes of FOMC, you get a knee-jerk reaction from the market, whether it be bullish or bearish. Now, that first move, that initial move, tends to be a fake out. Okay, so this is something to keep in mind as we go into FOMC. So for Bitcoin, what that could mean is, let's just assume that BTC is trading right where it is, today on Wednesday. So at FOMC at 2 p.m. Eastern, if you see the market move lower initially, okay, this right here is probably going to be the fake out, and we're likely to see a reversal higher as the day goes on. Now, alternatively, if the market were to, from current levels, again, we're assuming that it's at these levels on Wednesday. If initially in the first few minutes up to an hour, the market spikes higher up toward 23, then that could be bearish because it could signal that this is the fake out, and we then get that move lower into support. So I would say that if you are going to trade FOMC, first of all, I don't recommend trading FOMC. I think the better option here is to wait for the day to close, wait for the dust to settle, and see what you're working with. But if you insist on trading FOMC, don't enter the market right in front of FOMC. And this is what a lot of traders do, and they get it terribly wrong. They either long or short the market a few minutes before 2 p.m. Eastern. And that is a terrible approach because really you're just gambling. You're just hoping that the market plays out in your favor. A better way to do it is to watch that initial reaction, okay, and play the extremes of the range. And what I mean by that is, again, if we see an initial move lower, then you look for a long at support. If we see an initial move higher within the first few minutes, you look for a short at resistance. That's a much better way to play it, a much safer way to play it than simply entering long or short right before FOMC, right before the Fed announces their rate decision, because that is just gambling. It's a lot better to wait for that initial reaction and then either long or short from support or resistance respectively. Now, with that said, like I mentioned before, in my opinion, the better way is to wait for the day to close, wait for the dust to settle, and then go from there. All right, so those are my thoughts on what's happening right now with the crypto market as well as the S&P 500 a few days before FOMC. So I'm not bearish right now. I have no reason to be. We can see that the markets are holding above those key support areas going into FOMC. And like I mentioned over the weekend too, a lot of times FOMC tends to serve as a local top or bottom. So because Bitcoin is moving lower over the past week or so, FOMC could very well trigger a local bottom for the market. But again, it all depends on that reaction, that initial reaction, as well as where the market goes into the daily close. All right, so I have no interest in trading these markets right now because, as I said, I do think we could see a lot of sideways movement here going into FOMC, and I would be very, very careful if we were to see Bitcoin over the next day or two start to close below some of these support levels, just because a lot of times when you get a breakout like that, right before FOMC, it tends to be a fake out. So I'm not bearish right now. I have no reason to be bearish while the markets are above support. That could change, okay? But as of right now, I am not bearish on the crypto market. Now, if you did enjoy this content, be sure to subscribe to the channel, click that bell icon for notifications, and don't forget to leave your comment below. Furthermore, if you do enjoy this type of content, there is a link in the description for a free 7-day trial to Crypto Academy. You can try it for 7 days. If you love it, you can stay on, pay the monthly fee. If you don't, do nothing and you won't be charged. All right, I hope you enjoyed the content, and I will talk to you all again tomorrow.